Opeoluwa, a research analyst at Cordros Securities, joins me now to unpack the results. Opeoluwa, thank you so much for your time today. And as these earnings are trickling in, let's help us better understand how investors are positioning in the markets.
Yeah, I mean, thank you for having me today, once again. So, I mean, looking specifically at how we've seen the market play out today, the market is currently up by upwards of around 1%, as as we've seen, particularly keen interest from investors for the bank, given solid performance that banks put out for the Q3 period and even for the 9 months period. I mean, we've seen releases from key banks like Access, FBNH, GTCO, and Stanbic, and I mean, the story around these banks has pretty much been the same for 2023. The growth or their performance has basically been driven by core income growth, and also the effects of the revaluation gains that we saw in the first half of 2023. And also seen some interest in NASCON also. I mean, aside from the positive corporate developments that market perceive for the company as part of the Dangote Foods merger. Company also continued to put out very strong numbers rather in 9 months 2023 period, even for the Q3 period as a standalone period. And this was pretty much driven by the company's strong volume play in the period. And also the interim dividend that was announced this morning, which I think is the first interim dividend for NASCON in the period, was also quite instructive, and also a key factor for why investors are quite keen on the stock today.
Yeah, because I can imagine how it has been. Because looking at how the year has been for equities, it's been quite interesting when you look at how the sectors are performing despite the headwinds here. We're seeing the Ocean Index up about 31%, Oil and Gas Index up about 102%, Consumer Goods up 94%, the Banking Index up about 67%, and the Insurance Index up about 55%. Do you think we're going to go down this line as we wrap up the year?
Sorry, I don't know.
Yeah, do you think that we're going to see this being sustained as we wrap up the year?
So, I mean...
Right, seems we're having a
we still expect...
Okay, back up now.
Sorry.
All right.
Okay. Yeah, so, I mean, as we stated previously, we sort of expect a choppy trading pattern in the equities market. I mean, what we believe is that most of the gains in equities for 2023 has already been booked for the year, given that we've seen significant development that's pretty much triggered positive action from investors in terms of positioning in Nigerian equities. So aside from the earnings season that is about to be completed, except we have any we see any significant development in the macroeconomic space that changes the story of things. I mean, when we speak about FX, most particularly any positive development in that space, that might possibly be the only trigger that might push the market to outperform where it currently is at this moment. But for the rest of the year, for the rest of 2023, what we expect is a choppy trading pattern. But I mean, we believe that the market is well positioned to see out the year with a significant positive return.
Yeah, interesting returns here. But let's look at those earnings now, according to the sectors. And for the telcos, we're seeing MTN there increasing subscribers, but also having challenges in bottom line. And I'd like you to speak to that as well.
Yeah, so I mean, for MTN, what numbers show pretty much is very strong fundamentals, right? Just like you rightly alluded to, with subscriber growth, going quite. I mean, we saw that data revenue surpassed voice revenue this year and becomes the largest contributor to MTN's revenue. Out basically, right? But I mean, the issue for MTN in terms of profitability, sort of revolves around the effects of, or let's say the impact of the FX devaluation on the company's operations. So, I mean, from what we expect, or what market expectation was, and even as rightly corroborated by management, significant portion of the effect of the FX valuation in H1 2023 will be felt, or rather was felt in Q3, as this significantly impacted the tower cost, which is pretty much predicated on the FX rate from the previous quarter. So this significantly impacted EBITDA margin by as it translated to higher costs, and then also the higher FX losses, given that FX the FX reference rate is quite significantly higher than what it used to be. We're speaking about 750 levels to about 460 levels in the prior year. So this significantly affected their profitability expansion. But I mean, given how resilient the company is, they're still able to record positive profits. And we think this is just an issue that would occur for this year. By 2024, we expect MTN and even other telco players in this space to pretty much return to a strong profitability growth that we've come to know them by.
So let's get to the banks now. And in terms of trends that you're seeing in the numbers that have come out so far, what are you picking out?
Yeah, so, I mean, banks are sort of in a favorable position in 2023. I mean, we're in an high interest rate environment, which means that which pretty much has translated to higher income for their earnings assets. And then we've seen non-banking verticals also, particularly from the old cos, pretty much favor the performance of banks and also non-core income for these banks. So, I mean, you speak specifically to the FX valuation also, which has significantly strengthened the position of banks in terms of profitability and performance. So, I mean, those are the key trends in the banking space right now, and I think that they'll see out the year quite positively, given that these factors will remain in place even through Q4 of 2023 and going into 2024.